Welcome to the AACFB's 2022 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB and I'll be your host today. Our presenter today is John Hollander with TradeRiver USA. TradeRiver USA is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce TradeRiver, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. Please reserve the chat for communication between attendees. The entire webinar should take no more than 30 to 45 minutes. For those of you who would like to review this webinar at a later date, it will be posted on the 2022 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I will turn things over to John. It's all yours.
Great. Thank you, Monica. I appreciate that very much. And hello, AACFB community. It's great to be with you today. Chuck Brazier, our Executive Vice President, was going to join me on this presentation, but unfortunately, he was not able to make it today. He picked up a bug at the recent conference in Las Vegas. At any rate, I'm really pleased to be with you. We are as Monica mentioned, an AACFB funding source member and a gold sponsor, as we have been for a number of years. And really equipment lease brokers and the commercial finance broker world is really the core and the backbone of our business. We're passionate about working with small businesses, SMEs, and we work very closely with partners and clients. We have funding programs for all levels of credit, really A, B, and C credit level clients, US and Canadian companies, and we have an affiliate in the UK that works with UK and EU companies as well. We're a funding solution that bridges the cash conversion cycle, that is the revenue cycle between accounts payable and accounts receivable on the other end, for growing companies that need working capital to fund production to supply products to their customers, which is really the name of the game in almost any business. We've got a great deal of a great depth of experience in trade finance and banking, and we developed the TradeRiver fintech platform in 2011. It launched in the UK in 2013 in the US, and it is a very innovative trade finance platform that has won several awards, and most recently Growth Finance Awards in 2019 and 2020. We provide trade finance solutions for growing US and Canadian companies that need to bridge that gap in their supply chain, whether they need production finance to fund their suppliers offshore, like in China or Africa or Asia, or they're buying domestically to supply their US and Canadian companies. So we have trade finance, supply chain finance, purchase order finance, and receivables discounting products and solutions for companies. Global trade has really bounced back since the pandemic. It was 10% higher than the pre-pandemic levels as of May 2022. Economic growth forecasts for 2022 are being revised due to the rising interest rates, and there's a possibility of a recession on the horizon. But what has happened really because of economic conditions and rising interest rates and really the supply chain disruption is that there is a greater need for supply chain finance to fund that elongated supply chain. So manufacturing production in the US has increased by about 3.33% year over year as of August. And there are in the US a huge number of small companies under 500 employees, which is really the sweet spot for TradeRiver. We do work with, we're very agnostic in terms of the types of companies and industries we work with. It's really a broad range because we'll fund both products, equipment, supplies, and raw materials, as well as services. So we will work with service providers, even in contracting, manufacturing, importers, exporters, wholesalers, brands, distributors, and freight forwarders are some of the bigger industries that we work with. So who is a TradeRiver client? Who do we work with? Many of the clients in your existing deck that you're providing equipment leases to, they have the need for products and services that TradeRiver can fund. We work with U.S. and Canadian-based companies and U.S. subsidiaries of foreign companies. We typically want to see a company have at least a 20% gross profit margin or higher, because trade finance, supply chain finance, is not the lowest, is not the cheapest form of finance, very frankly, but we want to make sure that the incremental profits and revenue that we're driving for the company is not going to be, is going to make sense for the client. We don't want to work with companies that have judgments or tax liens or bankruptcies, but they could have them in the past. Typical annual revenue, $2 million to $500 million. An experienced management team, but even a startup company can work for TradeRiver if that company has had past experience and they have some transaction history that we can see. We like our funding through our revolving trade facilities. The tranches that we fund range from $25,000 up to $5 million each. We work within a revenue cycle or a funding cycle of 30 up to 150 days. So we look to fund transactions that will become invoices from their end buyer customers within up to 150 days. That would be the definition of our time frame. And then we offer revolving trade facilities ranging from $250,000 up to $25 million. The credit we look for on the client's end buyer customer when we're looking at that receivable side as our credit takeout are U.S. and Canadian companies that have very strong credit, whether they're SMEs, a blue chip company, or a government entity. So some of our clients are government contractors. The credit and onboarding process for clients is very straightforward. We will work with you on the basis of just an email referral, or you could send us your standard form with some basic information on the company, the products, what they're purchasing and what they're selling, and basic information. We will do the rest from there. We can very often we like to jump on a phone call with our partner and the client to drill down a little bit on their supply chain, make sure there's a good fit. Then we'll collect financial documents, go through credit approval, issue a term sheet, usually within 3 to 4 days of receiving a financial package from the client, enroll the client on our STEPS transaction platform so they can trade in a cash position with their clients, with their suppliers. And then we'll also enroll their suppliers with TradeRiver for those transactions. So here's a graphic of a typical transaction and the way it would work. Once our client, the buyer, represented on the bottom part of this graphic, is enrolled, set up for their trade facility, they will enter the transaction details, just like entering a purchase order with their supplier. The supplier will then accept the transaction details, so they can even amend it. They will certify each of the steps of a purchase and sale transaction in a virtual way on our platform. Those steps would include certifying that the goods have been delivered, received by our end buyer, our client, the buyer in the transaction. Then a payment obligation is issued by the seller. It's accepted by the end buyer, creates an instrument we call a confirmed payment obligation. And then the client has up to 150 days to repay. In this case, it says 120 days. That would be, in some cases, we look for a shorter period if we're utilizing a different model, which would be a trade credit insurance model. But for the purposes of this, we use 150 days as our credit period. 3 programs we offer. We offer a trade finance program, which is really doable for A, B, and C credit level client companies. The company end buyer that your client is selling to, where we're using their credit strength and that receivable as the takeout, they would have to be A credit. And we combine really two programs, a buyer program for purchasing products from the supplier and a receivable invoice program where we will factor that receivable, and it can just be those individual receivables that the client chooses to factor so that we can cover the buyer program. Then we have a factoring, a standalone invoice receivable or invoice discounting program for A, B, and C credit clients. Again, we want to have A credit level end buyers. And then we have a standalone buyer program. A number of our clients have this program where there are no receivable, there's no receivable end. We're simply funding their supply chain based on the credit strength of that company. So this is what the combined process looks like. And so picture a company that you're working with. It might be a company that has, you've leased forklifts to. That company has a product that they need to stock in their warehouse. So they're buying a product from an overseas supplier that would be covered under the buyer program on the top. And they have an end buyer customer, someone that they're selling their finished product to on the other end of this. We would use that purchase order that's been issued by the end buyer to your client, to your customer, where it says your company here, to perfect our funding of the front end of their supply chain under the buyer program. So we see that there's a purchase order from a credit-worthy end buyer customer of the client. We see that they have, let's say, a $2 million revolving trade facility with TradeRiver. They're going to make a $500,000 purchase from a supplier offshore. We will fund that at the earliest purchase order stage, even before we have any finished product. The product could be in raw material form, and it could be overseas in China, for example. We can actually fund that on the basis of knowing their supply chain and knowing that we have this eventual invoice from the seller side, the seller first program side, that we will use as our takeout to pay off that first program in step 7, where TradeRiver gets repayment through the invoice process. We pay that off. We pay the client the full amount of the invoice less 10 or 15% that we withhold, and then we'll continue to factor that back end until that receivable is due and paid to TradeRiver in step 4, and then we pay out the final payment to the client, and our partner gets a commission on each of these programs. So there would be a commission for the buyer program payout, as well as that factoring back end where we're holding that invoice until final payment. And folks, I don't know if we made this clear, but if you have any questions as we go through the presentation, please put them in the question screen of the Zoom chat. It's not in the chat box, but in the question section, and Monica will bring them up as we go. Thank you. This is what a typical supply chain looks like. This just to orient you guys and gals in terms of what a supply chain is and how it has a seller component and a buyer component and an end buyer component. You have, to start the whole process, you have your client placing a purchase order with their supplier. It could be offshore in China under our buyer program. They will need to fund that, probably 30% of that transaction up front to get production started. There will be a manufacturing cycle where the product is made by the producer offshore. And then when the final product is assembled, there'll be a final payment many times at the export terminal or at the time of export, So in this case, it shows 4 weeks into the process. So you have a 30% payment, the other 70% at shipping. Then there's ocean freight, could be 4 weeks or longer. Now that we haven't, we really have extended supply chains where shipping has been slowed. There's a payment to the shipping logistics company, a payment to, and then the product is sold to, in this case, to a distributor who would be the end buyer customer. And that distributor will then move the product on to their customers.
We did have a question. They wanted to know what CPO was on the last slide.
Okay, great. Thank you, Monica. So what a CPO is, a CPO is a confirmed payment obligation. So once that transaction between the buyer and seller is completed on our STEPS platform, the seller issues a payment obligation to our buyer, which is like issuing an invoice, and the buyer accepts that payment obligation, creating this CPO. So what our STEPS platform does, it contains all of the steps of a purchase and sale transaction all the way through to this confirmed payment obligation. And that gives TradeRiver a great deal of security in knowing and seeing, and both the buyer and seller have a great deal of security in knowing when they finish a transaction on our platform, which they can do literally in 30 minutes or less, just by executing these steps simultaneously back to back in a virtual platform, even before product has even been produced or has physically shipped. The client can accept the goods and accept the payment obligation, creating this instrument. And then we will fund that transaction in a non-recourse cash payment to the supplier so that production can be started. And it also puts your client in a much stronger position as a better buyer for their suppliers. And that gives them all kinds of advantages, taking advantage of product discounts. They become a stronger buyer at any rate. Hopefully I answered that question. Please give a follow-up question if you would like further. So getting back to the supply chain funding critical path, you have a customer order placed to get production started from the supplier in order to fill production for your end buyer customer. The end buyer is on the right side of this graph, where delivery is going to happen about at week 11, after the product is paid for and then shipped from the U.S. Customer to their end buyer. Okay, so you have the production payment. You have 2 production payments, one to start production, one final payment when shipping happens. Then you have the freight, you have payments for logistics and other shipping expenses. Then you have the end buyer making payment or making an initial payment to the supplier. And then you have the invoice is created, and then you have a receivable. The receivable is where TradeRiver would convert from a buyer program facility to a seller program under our trade finance program. And we would factor that receivable for the 45 days or 60 days, whatever that period is going to be for that particular end buyer. So this is the supply chain funding critical path. And we would establish that for each client that we work with, working with you and with your customers. Sorry, I'm having trouble advancing the screen. Okay, there we go. So how it works. TradeRiver STEPS transaction platform is it encompasses all the steps in a purchase and sale transaction between a buyer and a seller. So you have our client, the buyer, in this case, starting production, will enter a transaction. His seller will certify the steps that the product was dispatched. The client will certify that they've received the goods and accepted the goods wherever they may be in the world. They could actually be in raw material form in China. Client will accept the goods. Seller will issue a payment obligation. Buyer accepts. We will go ahead and fund that transaction to get production going. So that's the platform, the Steps platform. There's also a partner portal in the platform where our partners can see the transactions related to their your clients on the platform. So you'll know when to expect commissions and what what stage your client's transaction is in. What we look at with the clients, the documents we collect we'll look at their bank statements for the last 6 months, 2 years tax returns, 2 full years tax returns, and then interim financials and the past 2 years financials as well. We'll look at their current AP, accounts payable, and accounts receivable aging reports. And we'll look at the personal financial statement of the owners. And if there's a group of companies that are related, we'll look at that relationship as well. We want to then see a prior completed deal checklist. We want to know that the client has a successful track record trading. So that might be a purchase order they had from their end buyer customer, also the contract terms and conditions. And then we want to see the supplier purchase order that client issued to get production started from their vendors, the contracts, terms and conditions that also go with those suppliers, and then shipping documents in the full chain of custody, so we can see where the risks are in the supply chain so that we can mitigate those risks as we, when we're funding that front end, there's no invoice, so we don't have security. So we will basically make sure that there's security in terms of the way that the supply chain is being managed. And then once we've underwritten the client, we'll get a term sheet out. We will onboard them on the Steps platform. We'll get their sellers enrolled and they're ready to trade. And then as they trade, we just ask to see the purchase order, the underlying purchase order from the end buyer customer, from the client's customer. So we know who's going to be our invoice takeout on that end. And then the contract terms and conditions with the supplier. And then we're in business. And what normally happens, folks, is once we're set up, a client is set up, it will become a repetitive, annuitized revolving trade facility. They will use it on an ongoing basis to fund the company's growth, essentially. So to fund those purchase orders that they have from their strong end buyer customers, so they can get production done and grow the business. Our partner program, TradeRiver, we like to work, as I said, very closely with our partners. We have a very strong partner development webinar series and seminars that we put on to make sure that our partners are fully trained. We're very hands-on in terms of working with the partners and our clients. As you bring a client in, really the greatest training is that on-the-job training. When you've referred a client, we get on the phone, one of our team members and we drill down with the client. We find out if it's a good fit. We'll collect documents and then we'll get underway. But what you'll discover is that it's a really interesting process. You really get to learn your client's business, and you become an invaluable part of their business because you are funding. You're literally giving them a vehicle to fund their growth cycle, so they can add additional incremental profit to the bottom line. And that's really a powerful thing for a business, because every business hits the wall and they need that kind of funding at some point. Partner introducer enrollment. Monica, I think we might have one more question I see in the Q&A, but the
only one I see is that first one.
Okay. Thanks, Monica.
Oh, now we have another one that says any way to make the last slide larger. I can try to make it larger on my side.
This one?
Hopefully that's better. I
was trying to enlarge it. Is that better? So these are the things we need. Typical financials, prior deal checklist. So that would be the purchase order that the client receives from
They're
the.
looking for the part with the partner program info, the one after that with the pictures.
Okay. Okay. So this is a really good tool for you folks to use. This shows it's our partner program matrix. Okay. So you have the three programs that we talked about. The trade finance program is really a combination of our buyer program and our seller program, where we do a purchase order facility to fund production so the client can pay for their products and raw materials. And in the case of equipment, folks, we've done a number of deals with equipment lease brokers where that equipment has to be purchased offshore and then brought into the US. So you have to bridge that period before the product is physically here and can be put in under an equipment lease. And you don't have the security over the asset. We can fund that bridge period for you until the product arrives, and you can do that. But so that would be the buyer program, backed up by the equipment lease broker would be our takeout under the seller program. Instead of a factor or a bank, we would work with you guys. But we have three programs. We have a buyer program, standalone. We do have a number of clients in this program where they have strong credit. We fund their supply chain just on the basis of their commitment to repay us and the personal guarantee we have with the owner of the business in our agreements. So we don't have to have a third party invoice on the back end. That facility will go up to $10 million in revolving trade facility. We have a seller program. We can go up to 15 million on that program. That's for US and Canadian companies selling to strong US and Canadian end buyer customers, clients of theirs. And then we have the trade finance program that really combines the two of those, where we have facility lines that can go up as high as 25 million. And we'll work with A, B, and C credit level customers, clients. And we're looking for, again, as we said, A+ credit, SMEs, blue chips, and government entities. And I have this slide available for anyone. I can email any of you these materials, so you'll have it convenient and at your fingertips when you talk with your clients. Okay, so whoops, where are we, Monica? Let's see. Partner introducer enrollment. Okay, so as with all of our processes, our partners enroll through a link on our through our website that takes you to the STEPS transaction platform. It's where clients log in. What we ask is that any partner that's interested in enrolling with TradeRiver to become what we call an introducer or a broker partner is to reach out, give us a call, shoot us an email, and then we'll work with you through the steps to get you enrolled. But you would enroll on the platform. We would set you up on the STEPS platform, make sure you knew how to navigate the STEPS partner portal, and we would just DocuSign the introducer agreement at the end of the process. Client success stories. Oh, I see we have a couple more questions, Monica.
So just one that I see says, can you provide a range of rates?
Yes, absolutely. So I'll do that as we go through this example. Okay. So we have, this is a very large medical distributor importer that's buying products, medical products, and selling them to, in this case, they had a very large client that was the Department of Defense under the Warp Speed program, and they were buying syringes and needles. But the rates under the seller program, or I should say the buyer program, the front end of our trade finance program would be somewhere in the range of around 3% for a 30-day funding period. And then on the backside, we would drop that about 100 basis points for the factoring period until that receivable once that invoice is created and until that receivable is paid by the strong, in this case, the strong government entity that would be paying us off. So the riskier side of the supply chain is that upper part where that buyer program kicks in, where we're buying production, we're paying for raw materials or offshore production to get started, to get that product manufactured until that invoice, until it's finished and inspected and that invoice can be in place, at which time we go to the lower rate program. So what we're doing is bridging both sides of that gap in the supply chain, so to speak. Okay, next question, Monica, any?
None right now.
Okay, perfect. So, to go through this example a little further, this is a client who had been with TradeRiver for some time before the pandemic hit. They had a very large, they came to us and said, we have this very large opportunity to work with the Department of Defense under the Warp Speed program that was addressing, the COVID emergency. So we set them up on this facility for a very large trade facility, up to 32 million. And we were funding pretty large tranches up to 4 million. That's a little bit on the extreme side, but this is, as an example, they would need a 30 to 60 day credit period, 30 days on the front end, another 30 days on the back end until the payment came through. And we would handle it the way that I mentioned in tranches. This is a more typical client. This is an LED display assembler. They have a kind of a high-tech product. They buy and assemble and deliver these products for the high-tech display market. So their clients might be Disney or Paramount Studios or other large corporations that need a very high-end display. They probably sell to some companies in Las Vegas, for example, where many of you were a couple of weeks ago with us at the AACFB conference. But they would then be, their end buyer customer would be our credit on the back end. We would factor that receivable. So the front end might be let's say 60 days, and then there might be another 30 to 60 days on the back end under the seller program. So we're really doing an end-to-end supply chain finance where the client was in need to pay the overseas supplier to manage the assembly and mount their LED displays at their end user site. And then really through TradeRiver, we were able to combine both programs to provide the client with what they needed. And they did it on a selective basis. So they choose which end buyer receivables they want to use to factor and which POs to pay their suppliers they want TradeRiver to fund. So it's what it does is, again, it puts the client in a cash position to fund their supply chain, meet the growth demands, and add revenue to the bottom line. And as I said, we have really a diverse group of clients. We work with companies like that LED distributor, but we also have this coffee roaster distributor. Really is an importer, buying the green coffee beans, importing them and selling them to very high-end coffee outlets across the US, Canada, and as well as in the UK. So they might buy a container at a time, around $200,000 for a container of a very high-end coffee, import it, store it in different warehouse facilities in the US, and then sell it and distribute it to their customers. In this case, we just worked with this company under our buyer program. We didn't have to involve the invoice side. And the last example I'm going to use is luxury spa equipment manufacturer who has a major international brand of spa equipment that they make a very specialty kind of spa equipment for. And they contract with a manufacturer in China who produces it. We fund that producer and they bring the product in and distribute it. The client has been with us for roughly 4 years, and typically they're going to do their transaction sizes are around 500,000. When this particular client started with us, they were much smaller, maybe $12 million a year in revenue. they've grown to well over 50 million, and we started out with a $500,000 facility. Today it's 2 million, and our partner has been getting ongoing commissions for a number of years as for each transaction. That's our presentation today. If there are any more questions, be happy to drill down with it. And if you guys would like to follow up, please feel free to drop me a line or just give me a holler, reach out to me. Be very happy to, to share. And if you have any opportunities at the moment, we'd be happy to jump on those. Monica, any last questions, or are we good to go?
How does the commission program work?
Okay, so the commission program works so that each time a client enters a transaction, I'm going to go back to this screen. Each time partners get 10% of our transaction fee for both the buyer program, the seller program, or the combined program. Okay, so let's say a client places an order for, just to use round numbers, $1 million worth of product that they're bringing in from China. And they're using, that's going to be out for 60 days under the buyer program. And then another 30 days will be, the invoice factoring side. So under the buyer program, there'd be $1 million out for 2 months at 3% each month. That would be $60,000. Partner would get a $6,000 commission on that transaction for the buyer part of it. When it converts to an invoice on the receivable side, and let's say there's another 30-day terms, and let's say that the end buyer is buying the product for $2 million. Okay, that's the final end buyer price, just to use round figures. So we'd be factoring $2 million at 2% for that 30-day period, less the 15% residual that we would hold back, right? Or 10% of the invoice that we would hold until we were paid. So the math would be $40,000, 10% to the partner, but you have to take off that 10%. So I think it would be, instead of $4,000, it would be 10% less than that. $3,600 would be the commission. Okay, so it's our commission structure and our fee structure is clients do not pay for underwriting, documentation fees. They don't pay for wire fees or any other facility renewal fees. There are none of those myriad of different fee structures in our program. We just have a single transaction fee for each transaction the client utilizes. So a client can have, let's say a client has a $1 million trade facility, but they only really need to use 200,000 at a time. The client isn't going to be charged for the entire facility for underwriting or any percentage of that. They're just going to pay a transaction fee for each transaction, and the partner will always get 10% of that fee. Okay, for the life of the account. Any last questions? Okay. Again, I want to thank you all very, very much for joining us today. It's been a pleasure talking to you, even though I can't see you. And I welcome you to reach out to me or Chuck Brazier at any time. We'll be happy to take your questions and work with you. And again, here are our contacts. You can reach me at John Hollander with an E at TradeRiverUSA.com. That's my direct number. You could also go to our website and send an email through info@TradeRiverUSA.com. And Chuck Brazier's information is there as well. Thank you, Monica.
Great. Since there's no more questions, we'll be ending the webinar now. A big thanks goes out to all our participants, and especially our valued funding source member and gold sponsor, TradeRiver USA. Thanks for a great job. We invite everyone to meet with TradeRiver in person at our annual conference next year in May 17th to the 19th. We'll be in Portland, Oregon. Thanks to everyone. Have a great day.
Thank you. Take care, everybody. Bye-bye.